Hello, everybody. Welcome back to The Common Law. My name is Attorney Ed Berkman. I'll be your host this evening. Here at The Common Law, we like to talk all things legal issues, really breaking them down for the common man or woman, so to speak. And we also might touch on some current events here or there. Now, before we get going, we are broadcasting here out of our Newburyport studio. We are in the dog days of summer. It is hot, it is rainy, it is thunderstorms every day. So we are in the throes of summer, and I hope everybody out there has a safe and enjoyable summer. Here at The Common Law, we discuss everyday legal issues, as we've discussed. Now, although I am an attorney, and my guest this evening is also an attorney, we are not your attorneys. If you have a question, or if you find something that we're talking about relates similarly to your situation, please do not construe any of this as legal advice. I assure you, every fact pattern is different. Even slight differences can make a huge impact. We like to say the devil is in the details. So again, please do not take anything that I say as a legal opinion that you should use in your case or your situation. And going forward, again, this is just a casual conversation about the law. No legal advice is being given out here today. My guest this evening, his name is Brian Murphy. He is another associate attorney at the law firm I work at, DeRogers and Tierney. We're out of Beverly, Massachusetts. We also have offices in Boston and Duxbury. Brian, thank you for joining us on The Common Law today.
Glad to be here, Ed.
Great. Now, Brian, we at DeRogers and Tierney, it's basically, or mainly I should say, a estate planning, estate administration law firm.
Correct, yeah.
You handle most of the estate administration stuff, correct?
Yep, that's
Now,
correct.
How did you kind of get to the point where you'd be an associate doing estate administration?
So, I could go the long story. The long story is I'm from Pittsfield, Mass. I, went to undergrad in Springfield, Mass. I then went to law school at Suffolk Law in Boston, so I've migrated east, so to speak, from on the New York border, essentially, out to this area. My first job was in Gloucester. While in law school, I was initially a history major before law school, and I didn't want to teach, but guidance counselors and all said, a lot of times history majors, reading and analytical writing, you're good with the law, and law school is a good path, and I liked it. I went that way. But I didn't want to be in a courtroom, do anything litigious. I'm not aggressive like that, I don't think, So I found interest in numbers and transactional, helping people plan for their futures, the idea of, last wills and testaments, trusts, healthcare proxies, things like that, helping people save money and try and avoid taxes. So while getting my JD, which is your law degree Juris Doctor, I also did a tax law master's program, and there's Latin for it, but it's an LLM. So I have my JD as well as my tax LLM, so it's like a master's of law. That was some additional law school. I did an advanced program to get it all in 3 years instead of needing a fourth. And so my first job was in Gloucester. I then worked for a while at a large estate planning and estate administration firm in Waltham, and that was where I got a lot of my experience dealing with more high net worth clients, as well as, every, regular person who might not be high net worth, because everyone dies. Everyone pays taxes. And then we're up in Beverly now. It was a better commute than going from Beverly to Waltham.
Oh, absolutely. That Waltham commute is brutal.
Right. Absolutely.
So let's talk more about your LLM. So this is basically like a master's degree, but for lawyers.
Right. So it's typically a fourth year. I would say 9 out of 10 times. A lot of times someone becomes an attorney, they get their JD, they realize I want to specialize. So they're going to go and do maybe a year of day school or a couple years of night school to get that extra degree. My first year at Suffolk Law, they actually introduced a JD LLM combination program, which basically all of my elective courses, if I filled them with the appropriate tax classes, and I took one summer of high-intensity courses, would allow me to get my JD and LLM all at the end of my 3 years. I didn't have to do the fourth year. So it did cost a little extra for the summer courses, but overall it's a savings from a full year of law school. And so most of them are tax, because the tax code is complex, but you will see, I have a LLM in elder law. I have an LLM in estate planning. I have an LLM in immigration law. Some have an LLM in general law. You get the idea. But tax is the most common seen LLM.
Okay.
And, you get extra time, get extra experience. Some will say you just get extra resume booster to stick you up above the crowd. But it was one of those things where law school was fine. I always liked school, but I didn't want to do more. So it's like I'm either getting it now or I don't think I'm ever going back.
Yeah, it's smart. It saves you time and money.
Right.
So
Yeah.
might as well. If you're already there, you might as well get as much as you can out of it.
Yep, I wasn't doing anything for the summer anyways. I probably missed out on some internships because it was like 4 days a week, 8-hour days, but, it's extra degree, or internship experience. 2 to 1/2 dozen the other. So it worked out.
Well, that's fantastic. So let's talk about, find a narrow focus to talk about something tonight. Now, a lot of people ask me, they go, does Massachusetts have an inheritance tax? My mother, my father, they pass away. Am I going to have to pay money to inherit from them? And correct me if I'm wrong, I do not believe we technically have a inheritance tax. We have something called an estate tax.
That's right, Ed. So it's a common misconception, and sometimes people mean one or the other, but there's technically 2 different types, right? There is an estate tax, and there's an inheritance tax, and I can explain both for you. Massachusetts does not have an inheritance tax. An inheritance tax is where the recipient of an inheritance pays tax on the money they've received, and there's different exclusions and exemptions. Most states don't have this, Massachusetts being one of them, so really I won't go further into that because it just doesn't involve really what we do here. But an estate tax, Massachusetts does have, along with 13 other states, and then the federal government has one too. And that is basically the estate. When someone dies, they leave behind an estate. Assets in trust, assets in their name, life insurance proceeds, anything, retirement accounts, that's all part of your taxable estate. And if that value goes over a certain threshold, you have to pay a tax. Some people call it a death tax because of it does happen when someone dies, but the way the government defines it is it's a transfer of wealth, and because the assets are going from the person who died to their children or whoever they give their money to, that transfer is what's being taxed. So the debt gets paid before people receive the money, but then the people getting the money aren't paying more tax on that. The estate kind of pays the amount, and then the distribution percentages go. So, like I said, it's common. A lot of people go, "Oh, inheritance tax." I'm like, it's actually an estate tax. I'm like, "Oh, that's what I mean," and they conflate. Some don't even know that there are 2 different types.
Now, how common are estate taxes in Massachusetts? Does everybody who die have to pay it?
It's getting more common. I don't want to say it's 100% by a long shot, but Massachusetts is tied for the lowest estate tax exemption in the country. We're tied with Oregon. I don't know how to say it.
Yeah, the Oregon Trail.
For a $1 million exemption, meaning everything, once you hit that $1 million, you're paying a tax, right? So if we're out here in Eastern Mass, everyone knows the price of real estate that's going up. It counts everything, like I said. So you could have a decent property, even if it's been in the family forever and you paid nothing for it. It's what the value is on the day you die. So you could have a house that's got some good value, a nice retirement account. Who knows? Maybe you have a really hefty life insurance that you have. So the payout on your life might be a couple $100,000. A house is $600,000-700,000. Retirement, you're at that $1 million. And in Massachusetts, it's a cliff effect. So once you're $1 over that $1 million, they're going to tax you on the whole thing. And so that first $1 million is protected, but that cliff effect can be a really big deal. So a $1,100,000 estate is going to pay roughly $41,000 in estate tax. That's a huge percentage. That first $100,000 over $1 million is basically a 41% tax bracket. So it's becoming more and more common just because of the inflated costs of homes and things like that. Sometimes people, the one thing they have in their name is a house, but you have a good property on the water or something, all of a sudden, the house is worth 1.3, so Johnny and Susan aren't getting the house scot-free. You got to pay something for it.
I don't want to scare any of the viewers at home here, but it is dangerously common to get your estate up to over $1 million now, just owning a piece of real estate. I mean, anybody who's looking for a house right now, there's nothing on the market under $500,000.
Yeah, for something comparable to, it's usually at least 500,000.
Yeah.
And the chance that things completely dip in price around here is, more and more people want to commute in the suburbs. It only just goes up. Where I'm from in Pittsfield, maybe a house is still 400. Again, cost of living's less, values are less, but around here where we are, you don't. A lot of times we get clients that are like, I'm not a millionaire, and like I said, it adds up quick. You have no idea.
Surprisingly quick.
Yeah.
So that kind of stinks. No one likes paying taxes.
No.
So you die, you want to leave behind your legacy for your children or your next of kin, whoever that might be, a nephew or your friend's child or whoever it could be.
Yeah.
And they're going to have to pay after you die, even though that money has technically really already been taxed.
Yeah, you have a bank account making interest, and you pay tax on your income tax on that interest. That's another common thing I hear. Oh, my sister, she filed her taxes every year. She paid tax, and it's like it's completely different. And when someone dies, just a quick tangent, you still have to file a final personal 1040 return for them as well. So make sure you file their final income tax return while also dealing with the estate. And that's, like I said, just Massachusetts even.
No one likes doing their taxes, not even the dead.
Nope. No, but unfortunately the government says dead people don't challenge it. You know what I mean? It's very hard to get a dead person to say, don't take my money, unless you get a really angry heir. But then they kind of look at it and go, what am I going to do? So, and that's the state exemption level for sure.
So I've always... Oh, so state, you said state exemption level. So does that mean there's a federal exemption?
There is. It does not affect as many people by a long shot. It currently increases every year with inflation. Massachusetts is flat at $1 million. Currently, the federal exemption, as of the year 2023, is $12,920,000 per person. So a married couple that's 25. I'm doing mental math. Roughly 25 million. Next year, it'll go up more for inflation, which of course we've all seen. Likely the exact name of the Trump era tax break, that doubled everyone's federal estate tax exemption. It will sunset in 2025. So in 2026, January 1st, it will go back down to 5% index for inflation. So unless Congress or politicians change things, it'll probably go back down to 6 point something million per person federally. So that's still a far cry from the million, and 6 point anything per person is better than 1. But right now, federal doesn't affect a lot of people because a lot of people don't have over $12 million. But you might find some people that are on the fringes of the next class, so to speak, will get more affected by federal, which is, so you're paying a Massachusetts estate tax. Now I got to pay a federal estate tax as well, potentially. You're getting both, and there might be some credits to offset a little, but yeah, they're going to try and get you on both ends, unfortunately.
I have a background in real estate, as you know, so the only time I really experience this stuff is when somebody dies and the estate's trying to sell their property.
Right.
And so if the estate, it's always easier if the estate isn't worth that $1 million in Massachusetts.
Right. Yep.
You just file one of those 65C affidavit.
Absolutely.
Which is basically something that the person representative just says, the state's not even close to this $1 million threshold.
Under oath, I swear that it's not $1 million. Good.
And that's enough for the bank because all transactions deal with mostly deal with a bank and a mortgage, and that's enough to satisfy that or a title insurance company.
Of course.
That 65C. But if they do have to pay an estate tax, you have to actually pay that off before you can sell the house and get a lien release.
Correct.
And so that's done through the Mass Department of Revenue, correct?
Correct. Yep. Massachusetts Department of Revenue.
Or if, God forbid, they had it in a federal, then that would be right from the IRS.
I'll be honest, I've never dealt with one from the IRS, but I know that you'd have to get their release as well. Yeah.
You would have to have a pretty affluent client to have a federal estate tax.
Just find me someone who won the lottery. Maybe we can
exactly.
talk.
So, is there anything people can do to help them not have to pay this? Is there any way you can shelter assets to not have to?
Yeah, absolutely. There's a few different methods. There's some basic estate planning techniques. There's some advanced estate planning techniques. I won't go into the weeds of everything, but one simple way to do it is doing a basic estate plan with a revocable trust, for a married couple, right? So if you do right now, like I said, the estate tax exemption is $1 million in Massachusetts. So if you're a married couple, what'll happen is there's something called an unlimited marital deduction first spouse dies, all their assets can go to their surviving spouse, and they don't have to pay any estate tax. Great. Upon the second spouse passing, they only have that $1 million exemption. So let's say total they have $2 million. The first million is under the exemption, but the second million makes it a taxable estate. If you do a basic revocable trust plan that has tax provisions, something our office does, and many other attorneys too, you can protect up to $2 million. It takes the first million, the first spouse who passes, their $1 million exemption, shields assets. The surviving spouse can still use those assets while they're alive. And then when the surviving spouse passes, they have $1 million to protect as well. And so effective trust planning can, protect up to $2 million instead of just $1 million in assets. And I'm being approximate here, it's roughly $100,000 in estate tax savings just by doing an estate plan and being prepared, and making sure your trust has the assets in it and things like that.
And that's one of those things where it might not sound like a big deal now. It's like, if you're in your 30s or your 40s, you're thinking you're never going to be a millionaire, or let alone a 2 millionaire.
Right.
But you'd be funny to see how quickly people reach those thresholds.
Yeah.
They've been saving their whole lives, their life savings, their houses just shot up in value. So it does happen quite a bit. So it is, it's important to get an estate plan. I think we can both agree on that for a multiple of different reasons.
Yeah.
But proper planning saves a lot of headaches down the road for, your kids or whoever you're next to kin, whoever has to handle your affairs after you pass.
Right.
So it's really important,
Yeah.
as you've just explained, to get an estate plan and to plan for these things. And,
Absolutely.
Now, is this something that somebody could or should do on their own?
So, some people, you talk to your financial advisor, they'll say, go find an estate planning attorney. You talk to sometimes just CPAs and your accountant who looks at your numbers and goes, you should get an estate planning attorney. I know it comes off as, of course the attorney's telling me to go to their office or to an attorney to try and drum up business. And I kind of always had a hard time with them being like, listen, it just is the right thing to do.
It really depends on your situation. I don't want to say you shouldn't use a online legal platform.
If it's all you got,
yeah, it's like everybody's in a different situation. So, we're just trying to explain to you what the law is, not necessarily trying to tell you to use an attorney. But I have somebody do my taxes for me. I don't do my taxes. I don't know what I'm doing with my taxes. My wife says I don't know what I'm doing with a lot of things. But it's really important that you have somebody that's knowledgeable when it comes to this, because you never want to screw up something that's a tax. Because if you didn't pay your estate tax, well, then what happens?
If you don't pay it, a lot of people go, well, if I don't pay it, are they going to come find me? And honestly, I can't say for sure whether or not they have the resources and can go hunt down everyone and go, and if the life insurance database says this, and bank accounts say this. I can't guarantee it. But do you want to take that risk? They're going to come after you for tax fraud. They're going to come after you for putting liens on property. It stinks.
One thing's for sure is
taxes.
You can't sell your property if you owe an estate tax.
True. Absolutely.
It just won't happen. Even if you try to, you might be able to deed it to your friend or something like that. But once a title insurance company gets involved, or mortgage company or bank, you're pretty much can't transfer that property.
Yeah.
You don't have a clean title. You have a lien against it, basically.
Yeah, as you said, with the affidavit, the release of lien that can come from the DOR or the 65C affidavit of no estate tax. There are different ways to clear title, but you have to go through the right channels. And so, if you're going to sell a house, any good real estate attorney is going to go, is there, someone on the deed's dead, passed, was there an estate tax? And you can lie about it, but again, I'm not pushing that at all. That's a terrible plan. You better make sure there's no reason for the Department of Revenue, the IRS, or both to come after you for unpaid taxes. Making sure that title's clear. And there are ways we can help get that done so it doesn't hinder the sale of a property. Because what if the only thing for funds is the house and you need to sell? There are ways to work with the Department of Revenue to make it happen.
Now, if you don't pay it, does the IRS charge you any penalties or interest for that?
I'm sure they do. I've thankfully never had an issue like that.
So this is one of those things where we, as lawyers, we don't know everything. We don't know if they charge you a fee or interest. I would assume they would, but we can't know for sure.
I just don't know.
Well,
The funny thing with the IRS is with estate tax, with income tax, they always say we're going to charge penalty and interest, but there's no clear graph on a website that says this is the amount. They kind of generate whatever their rate is and go, here you go. Usually it might be, if you have a late return, it might be something like 1% of the total amount due every month up to a total of 20% extra. So, I mean, that can be a hefty, amount. But, again, federally is pretty lenient. A lot of people don't have a federal concern. Right now we have ways to double up on the federal estate tax. It's called portability. Massachusetts doesn't have this right now. But let's say you have, husband and wife, husband, doesn't matter, a spouse, and the first one passes away. What happens is you can file, and you have to make it anyways for the Massachusetts estate tax return because you send a Massachusetts 706 and a federal. So you already have the federal one generated anyways. You send the federal government a copy as well for portability. So let's say, and I don't have this money, right? But let's say I have a $5 million estate and I pass away, and my wife, right now she has $12.9 million, but it might go back down to that 6 we talked about in 2026. My unused exemption, that additional 7, ports over to add to her exemption. And so sometimes we'll have clients who, like New Hampshire doesn't have an estate tax, but they have a large taxable estate. So we still file the federal to save that unused exemption, that because we know you have a questionable sized estate. We need to save as much exemption as we can. And I think the IRS just increased the window up to 5 years to file that return for portability.
Okay.
I know we didn't explain before, I'm sorry. An estate tax return is due 9 months after you pass away.
Okay.
It's not based on the April 15th schedule we're all used to. It goes 9 months from date of death. You can get a 6-month extension. But if it's just portability where there's no tax owed, the IRS does allow a later filing.
Yeah.
But we try and be on time as best we can.
Well, Brian, I'd like to thank you for joining me today on the Common Law. Folks, if you have any questions on estate planning or estate taxes or taxes in general, Brian is your man here. His email address is going to be at the bottom of the screen. Reach out if you have a question. You can also reach out to me too, and I can get you guys in touch with each other. We work at the same office. So by all means, you contact me, contact him. You're going to be well taken care of. And if you want to email me a question unrelated to estate planning or taxes, please do. My email address is below here as well. Again, anything you heard today isn't considered legal advice. We are not providing anybody specific advice. Even if what we talked about today is exactly what you think is your issue, trust us, it is not going to be exactly the same. Reach out to us or another attorney and just run by your fact pattern with them and what you're dealing with and get professional legal advice that's catered directly towards you. Again, Brian, thank you so much for joining us.
Thanks for having me, Ed.
Today. Wealth of knowledge this man has, so please reach out to him. You'll be in good hands, trust me. That'll do it for us this evening. Again, I hope everyone has a safe and fun summer, and we will catch you next time on The Common Law. Have a good night.